we're going to cut rates today.
Yeah, but
do we need that?
Yeah, but what you left out of that graphic is the dynamic that we have right now. We don't live in a vacuum. Right now, we've got an inverted yield curve that goes inverted all the way out to 10 years. Most economic developed economies around the world with negative rates. Germany has negative rates all the way out to 70 years. And then in that dynamic, that yield curve almost demands a cut at this point.
Sure, but that's arguing, David, that the yield curve inversion is because there's these imminent recession fears, rather perhaps than simply everyone's buying sovereign debt because they need a place to park their cash.
Look, I'm not going to deny that there are excesses out there, but we live in a different world today. Inflation isn't the bugaboo that it was, 15, 20 years ago. Energy is likely never to hit the levels that it hit in the past several decades. OPEC as a cartel-like structure no longer exists. We're never going to see $150 oil again. In that dynamic, inflation can remain relatively benign. And overall, even in the greatest economy, interest rates are likely to remain below previous historical highs.
Make the case for the rate cut, though. Is it just this growing fear that manufacturing, we always hear about global PMI. By the way, that means Purchasing Managers Index, but manufacturing is only 11% of the economy here.
Yeah, and I would agree. The consumer is gangbusters right now. We had a monster retail sales report a couple of weeks ago. That consumer confidence number goes all the way back to 1994. But like I said, there are other dynamics in play right now. I think the structure of the yield curve is certainly part of that. You and I can debate on the merits of a rate cut, but what isn't up for debate is what the likely market reaction will be if we don't get one. It'll be harsh, severe, it'll be quick, it'll probably be 6 or 7% in a relatively short period of time.
What if we don't get a rate cut today? I mean, I know everyone's expecting it.
That's what I was just saying.
But what if we don't? What happens if does the stock market fall 1,000 points? Does everybody freak out?
No, we'll reset. We'll reset. It won't be the end of the. It won't be the end of the world. We've seen a stunning reversal in Fed rhetoric and now policy. If you asked me a couple of weeks ago if 50 was a possibility, I would have been in that camp. It's out of the question right now, given the strong economic data that you just said. But 25 is a lock.
25 is a lock. Now, what are we expecting from the words? Because the words may matter more than the cut.
Yeah, you're probably right. I mean, right now, the street is kind of coalescing around, certainly 2 or 3 cuts at this point. I think some of the excesses will come out in today's conference. I think someone's going to ask a question about corporate debt. We're approaching record levels at this point. Unfortunately, CEOs are raising all this cash not to expand CapEx. They're buying back more stock. And for me, that is CEO code for saying that, I'm completely out of ideas. This is the easiest way to hit an earnings target and make my bonus.
Goldman Sachs had it. I think the buybacks are more than 100% of free cash flow for the quarter. It's pretty unbelievable.
Pretty stunning.